I want to properly welcome back Doug to the podcast. Doug Young is, of course, my boss and the managing editor of Tyson Global. What have you got for us today, Doug?
The last week of the year is usually a dead time for new stock market listings. But don't tell that to the operator of one of China's hippest dining chains. Just in time for the new year, the company called Jiu has just made its first filing with the Hong Kong Stock Exchange for an initial public offering to raise up to 2.2 billion Hong Kong dollars. Or nearly 300 million US dollars.
So, what makes this restaurant chain so hip?
The company operates a number of different chains catering to a range of Chinese palates. But the two biggest are its Jiu, which specializes in Northwest Chinese fare, and Tai'er Suan Cai Yu, or Chinese sauerkraut fish in English, which makes a popular flavor of fish smothered in sour pickled vegetables. Yum. Of the company's more than 300 stores now in operation, Jiu eateries make up nearly half, while there were 121 of the pickles and fish outlets. In case you were wondering, the company's other chains include one called Double Eggs, another called Cooking Spicy Kebab. You can guess what they specialize in. All the restaurants include a mix of company-owned and operated stores, as well as franchised outlets.
Now, personally, I love fish smothered in pickled vegetables. But why should other people care about this particular IPO?
Well, what happens to this particular IPO could be a sign of what is happening with Chinese IPOs in general. It says something about China's growing middle class, and it might give investors a clue as to where they should invest their money, possibly, spoiler alert here, in the restaurant trade.
Okay, please explain how the listing of just one company can do all of that. And for the record, I'm extremely disappointed in your lack of puns so far.
Okay, here goes. Investors on the whole are showing a decidedly diminished appetite for offshore listings by Chinese companies in the U.S. and Hong Kong. Tech listings in particular have received a chilly reception of late, forcing many to drastically cut their fundraising targets. And even then, many have still seen their shares tank once trading begins. So it'd be interesting to see if this IPO can buck that trend. A large part of Jiu's relatively solid growth has been fed by China's growing middle class, looking for the latest trends in dining out. Its revenue was up nearly 50% in the first half of this year to 1.2 billion yuan, while its profit nearly doubled. That's pretty tasty fare for investors. And lastly, it looks like if you want to turn a profit, you might want to look at investing in Chinese food, not tech. Just over a year ago, another famous chain, hot pot operator Haidilao, also went public in Hong Kong, selling its shares for just under 18 Hong Kong dollars apiece. Fast forward to the present, when those same shares are now trading at more than 32 Hong Kong dollars, representing a healthy 80% gain. That's not so bad for a year, especially when one considers Hong Kong's Hang Seng Index is up by a more modest 13% over that time. So that should give any investor food for thought.
Thank you very much for that, Doug. And your pun quota was quite satisfactory.